Hi everybody, this is Super Testnet, and I know that my camera is not very good, but this is the best I can do on this occasion, so you'll have to deal with having a not very good camera today. I am going to present Aggeus Market today to the gentleman from Predix and to all of you who are watching, or who will watch the recording afterwards. So let's get started, and I'll go into Aggeus. And Sanjay, you're on right now. Feel free to interrupt. I won't be able to see you, so don't raise your hand or anything. Just start speaking up if you have any questions as we go along. Does that sound good?
Ah, yes. Uh-huh.
Yeah. Just
Very good.
interrupt me because I won't be able to see you because I'm looking at a different screen.
Right. Yeah. Uh-huh.
So, Aggeus is a name I gave to a protocol I created and have partially implemented that is designed to allow for permissionless prediction markets on Bitcoin. And Sanjay is in charge of one of those. Yeah, I'm talking with him about that, about how this protocol might be able to improve his software. I'm going to do an overview. First, I'm going to go over DLCs and their problems. I based this idea on thinking about DLCs and trying to improve them. I'm going to go over the desired UI that I want in a prediction market, and then I'm going to give a high-level overview of how I think I can achieve that using this software. Then we're going to do a deeper dive on the coordinator, and that's one of the important roles in this thing, how trading works, and something called market resolution. So that is the flow of today's presentation. Also, I gave this presentation at TabConf earlier last month, so some of you have already seen this, but that video is not out yet. Okay, so DLCs and their problems. Well, so I started this by thinking about DLCs, and I don't really like DLCs, or at least there's some things about them I don't like. If you've never used them before, a DLC is supposed to be a way for two parties in Bitcoin to bet on the outcome of a future event. In this example, I'm going to have someone named Kelly and someone named John, and they're going to bet on the outcome of an upcoming election between a Republican and a Democrat. And DLCs require somebody called an oracle. And the oracle is a third party Kelly and John in this case, agree will reveal the outcome of this bet. Sometimes you'll see people do this on Twitter. They'll say something like, well, I think such and such is going to happen, and he thinks it's not going to happen. So we're going to put some money in like a 2 of 3 multisig, and then they'll pick someone from Twitter to be the oracle, and people make bets this way. I don't think it scales really well. And can I talk about why? Yeah, I think this slide has some information about why. So why do I not think they scale really well? It's because this is a typical example of a DLC-like smart contract. Sometimes we do this with DLCs, which use fancy cryptography. The example I'm giving here actually isn't a DLC. This is called a hash lock contract. You can also do this with a 2 of 3 multisig. But in essence, the first branch here, the first branch of the script, says that there's some secret you have to supply, which is going to be revealed by the oracle. You have to supply some secret revealed by the oracle and hash it and run it through the SHA-256 function in Bitcoin. And if it comes out as something called the yes hash, which is revealed by the oracle in advance, then we allow Kelly to withdraw the money. That's why it says we check op equal verify, check that she knows the secret, and then we allow her pub key. We check her signature on her pub key to allow her to spend the money. And then the second branch says if the secret revealed by the oracle, when you run it through the SHA-256 function, comes out as no, or the no hash, then we allow John to spend the money instead. That's a typical DLC-like smart contract. This is actually a hash lock. I find them easier to implement, so I implemented this in my demo code that I'm going to show you in a minute. But the oracle has to publish both hashes in advance, the yes hash and the no hash, so that they can put them in this smart contract. And critically, Kelly and John have to know each other and know their public keys in order to create this Bitcoin address that encodes this type of smart contract. And I don't think that scales really well. And I'll tell you why. Kelly and John have to find one another, so someone has to say, I want to do this bet. Does anyone else want to do it? And wait for someone to want to actually do it. Then they have to agree on the terms, like the amount that they're going to put in this address. They have to agree on that. They have to fund the contract simultaneously, because if Kelly funds it and John hasn't funded it yet, John can just not do that. He can just not fund it, and then he has the option of, or the possibility of making money without losing anything, because if the oracle reveals the secret, he just takes the money. So they have to like fund it simultaneously in like a coin join or something, which is difficult to do. And you can't easily sell your position in these things. Let's say that I bet on the Republican, and the polls are roughly 50-50, and then he
Yeah.
goes up to like 90% likely to the Republican's going to win, I might want to exit that position while I'm ahead and take my winnings. And you can't really do that with DLCs. You just have to wait until the market resolves and then take your money.
Uh,
Sanjay, you got some question at this point?
no, that's a very no question, but yeah, that's very good. I didn't realize that. So in DLC, you have to wait for the event. You can't like exit maturely. That's a good thing to know. So um,
Yeah, so Sanjay said it's good to know that you. I don't know if you guys heard that. I'm not sure if it's picking up on the audio from my computer itself, but Sanjay said he didn't know that you can't really sell your position in a DLC. Well, I suppose it's possible, and that's part of what I've improved here is I thought of a way to do that. So I guess it's not impossible anymore, and I guess
okay.
it never was impossible because if I figured out a way to do it, someone else could have figured out a way to do it before me. But I'm not aware of any software that lets you sell your position in a DLC, except now I've made some. So this is the desired UI. This is what I think, in my opinion, a DLC or not a DLC, a prediction market should look like. I don't think it should look like trying to find someone to take the other side of your offer. I think you should be able to go to a website and see send money to this Bitcoin address to bet on the Republican, and send money to this Bitcoin address to bet on the Democrat, or maybe a Lightning invoice instead of a
Mhm.
Bitcoin address, but something like that. And it should show you what their current chances are according to the current state of the prediction market. It should show you what your earnings are, and you should have a little button to potentially withdraw any money you've made. That's what I think it should look like. And then later, let's say you bet on the Republican, or actually I'm going to say you bet on the Democrat in this case, and now he's gone up in the market. He's risen in the polls or whatever, and now he has a greater chance of winning. I should already be able to see how much money I've earned by doing that and be able to withdraw it right away. Now I haven't used Predix yet, but Sanjay, I'll bet that that's something that your market supports. You can
Yeah,
withdraw your earnings before the market resolves. Is that right?
exactly.
Yeah.
Yes, you can buy, you can sell. Suppose you sell, your sales proceed. Yeah, either it gets deposited to your Predix wallet or your LN address. So
So just in case you
yeah.
guys can't hear, he said yes, you
Mhm.
can, and it'll either go to your Lightning address or to your Predix account if you withdraw before the market resolves. That's the desired UX I want, and I think you can do this in a custodial way. I'm going to try to show you how we can approach this using the software I've written. We can't quite get all the way there, or at least I haven't thought of a way to get all the way there, but we can get pretty close to this. Good? Good so far?
Yep.
Okay, Sanjay is ready to proceed. So now, I want to go over my protocol 2 times. I think this really helped when I did it in Atlanta. I went over it twice. I went over it quickly, and then I went over it step by step in like a slower way. So I'm going to do that again. And to do that, I'm going to visit this link, which I might as well share with you, Sanjay. So let me go over to our chat. And here's the chat button. I sent that link to you so you can open it up on your computer and have it in front of you
Yep.
while I go over it.
Mhm.
The Aggeus protocol is kind of complicated. You can see that right from the start in that there are 5 different roles for people to take. So I
Mhm.
do not expect that I'm about to go through it quickly and just kind of say what happens, bang, bang, bang. And I don't expect you to
Yep.
follow along if you're watching the recording or if you right now, Sanjay. A lot of this is going to be new terminology. But what I think is going to
Yeah.
happen is that you'll follow some of it. You'll be able to understand some of what I'm
Mhm.
about to say. And it'll give you the right kind of structure so that when I get into the step-by-step one, you'll be able to, it'll be easier. So don't expect to follow what I'm about to say. But here
Mhm.
we go. So there are 5 roles in this. We're going to have Kelly, who's going to. Oh, you got a question, Sanjay?
No, sorry, I was coughing.
Oh,
Yeah.
okay, cool. We've got Kelly, who's going to be. Sorry, for anyone who didn't hear that, he said he coughed. So Kelly is going to be the market maker, and she is going to be 70% confident that the oracle's going to reveal the secret corresponding to yes, and she's willing to stake 10,000 sats in her prediction that he's going to reveal that pre-image, that secret. Then we're going to have somebody called a coordinator, and he is going to serve as a proxy in this trade so that Kelly can not need to know who her counterparty is in advance. That's one of the things I don't like about DLCs. I managed to fix that using something called a proxy. That's the role of the coordinator, and importantly, he's non-custodial. Sanjay, for your protocol, this would be your role. You in your protocol, you would be the coordinator. You're going to facilitate trades. You're going to help find counterparties, do matchmaking, but you're not going to hold custody of anybody's money. Then we're going to have John. He's going to be the buyer. He's going to come along and see an offer created by Kelly, the market maker, where she thinks that she can earn some money from making this prediction. He is going to take the opposite position and actually pay her 3,000 sats to acquire the option or the possibility of getting 10,000 sats if the market goes his way. If the Democrat ends up winning, he'll get 10,000 sats, having only paid 3,000 sats for it. Then the fourth role is Tommy, the second buyer. He's going to come along and he's going to want to buy into this market by purchasing John's position, and he's going to end up paying a premium basically to John to get into this position, because we're going to assume the Democrat rises in the polls, and thus it's worth more to Tommy, or more worth it to John to sell this position. We'll get into that. And then we've got the Oracle, who's the source of truth. He reveals a secret, yes or no, depending on who wins, or whether the Republican wins the election or not. So phase one of this protocol is for Kelly to create her offer. She says, I think the Republican's going to win. I think it's going to be, yes, the Republican beat the Democrat. I'm 70% confident of this outcome. I'm willing to bet 10,000 sats on this. And what she does, she doesn't know who her counterparty is in advance, so she is going to just deposit 10,000 sats into a smart contract to be described in the detailed section, and she's going to sign a transaction that allows the coordinator to change the state of her contract. We'll get into how that works in a little bit. But right now, she's going to go offline. She doesn't need to do anything else at this moment. She just deposits money into a Bitcoin address, signs a transaction, and then goes offline. She can come back later to see if she made any money. But her contract is going to have 10,000 sats in it from her. Then we're going to have phase two. John is going to come along and buy into this position. He's going to see an offer on the market that says, Kelly wants to get into this trade. She's staked 10,000 sats on this outcome. And if John pays 3,000 sats to Kelly, then he gets the possibility of winning 10,000 from this. So that's what we're going to do. He's going to agree to this. He's going to pay 3,000 sats using the Lightning Network. Kelly is going to, the coordinator is going to use Kelly's pre-signed transaction to broadcast her transaction and actually put the money into the DLC contract. That is changing the contract state, and he's going to create a mirror contract with John, where the coordinator is going to take the contrary position with John. What that means is the coordinator gives Kelly 3,000 sats immediately, just right now, and then John is going to give the coordinator 3,000 sats. We do this atomically using a protocol I'll get to. I don't know if I'll ever explain the protocol in this thing, but I've explained it in previous presentations, and it's an atomic swap. They're very common in Bitcoin. So if once this state has been updated, then if the yes preimage gets revealed, Kelly gets 10,000 sats, and if not, the coordinator gets 10,000 sats. That is Kelly's contract with the coordinator. And similarly, in John's contract, it's the reverse. If the Republican wins, the coordinator gets 10,000 sats, and if the Republican does not win, John gets 10,000 sats. And you may notice, well, that's how it works. I will go get to more into it later. So now we're going to move to phase 3 of 4. And in phase 3, we do a position transfer. John wants to sell his position. Maybe the Democrat rose in the polls and he can make some money off of this trade. So he's going to offer to sell his position for 4,000 sats. If you remember from just several seconds ago, he paid 3,000 sats to get into his position. Now he's going to try to sell his position for 4,000 sats. What he does is he signs a transaction telling the coordinator, if you pay me 4,000 sats, you, the coordinator, you get to keep the remaining 6,000 sats. Now, Why would the coordinator do this? Well, because what he's going to do is he's going to list John's offer for sale and say, if anyone's willing to pay 4,000 sats, you can get into John's position, where you have the possibility of winning 10,000 sats. So the coordinator finds Tommy, and Tommy wants to do this. Tommy says, I like that offer, I want to do this thing. The coordinator creates a new contract with Tommy, same terms as John's, and now we do an atomic swap again. Tommy pays the coordinator 4,000 sats via Lightning. The coordinator pays John 4,000 sats and executes a pre-signed transaction that just gives John his money and takes the remaining 6,000 sats for the coordinator. So now John has profited. He bought his position for 3K, his candidate rose in the polls, now he's sold for 4K, and he's made some profit. And we're in the gold. Last phase of this thing is market resolution. We're going to say, let's assume the oracle reveals the outcome yes, the Republican won. That means Kelly was right. She gets to keep her 3,000 sats that she got earlier from John. She additionally gets the 10,000 sats back that she put into her contract. She made a 30% profit. That's what she should make, because she bet she had 70% confidence, so she should get 30% if she's right. Tommy, meanwhile, he loses his 4,000 sat stake. The sats that he paid to what's her name to the coordinator, and he also loses the 10,000 sats that would have come to him if he had won, if the Democrat had won. The coordinator, meanwhile, breaks even. He gains 10,000 sats from his contract with Tommy, but loses 10,000 sats in his contract with Kelly. And he breaks even. He doesn't gain or lose anything, ultimately. If the Democrat won, meanwhile, and Kelly was wrong, well, then Kelly keeps the 3,000 sats she got earlier, but she loses her 10,000 sats, so it's 70% loss, which is what it should be since she was 70% confident. And Tommy gets 10,000 sats from his contract, minus the fact that he had already paid 4,000 sats to get into this position, so his profit is 6,000 sats. And once again, the coordinator breaks even. He loses 10,000 sats in his contract with Tommy, but he gains it in his contract with Kelly, so it's a wash for him. So that is the protocol fast. Now we're going to go through the protocol slow. Do you have any questions at this point, Sanjay?
No, but see, yes, I do. So here we are assuming that these bets are happening party to party, right? Uh, in typical real world, it doesn't work like that because there's never a party, there's never a counterparty, right? There's always be, sometimes there would be bets where everyone is betting on no, and sometimes there would be bets where everyone is betting on yes. Sometimes things changes, right? Depending on the scenario. So what we do is we use automated market maker, AMM, to basically play the role of buyer and seller if there is no really like other side, right? So this is great if it is between people, uh, but in reality that really never happens. It like they sometimes you have to, as a house or as a coordinator, as a provider, take those bets, take those risks, and offer people shares in it. Does that?
Yeah, just in case the people on the recording couldn't hear you, let me restate that. He says this protocol that I'm describing here works great if Kelly and John know each other, and if there are two counterparties. But in the real world, you don't know your counterparty. You don't know who you're going to be betting against, and so that's why automated market makers are the solution that is the go-to solution for prediction markets. Is that a good way to summarize what you said?
Yes. Uh-huh.
So yeah, that is. Let me go back to this slideshow earlier. What I'm
Yeah.
trying to get to is this UI, and
Right.
I'm going to use the primitives I talk about to try and show how we can build this, where you don't need to know your counterparty. You just go to a website, see a Bitcoin address, deposit to the side you think is going to win, and
Mm-hmm.
that is well. I don't think we can quite get all the way there, but I think we can get pretty close. And if
Yeah.
you're doing that, there's no automated market maker in the background, but what's going to be
Mhm.
happening is the coordinator will be finding you a counterparty without you needing to know who he's finding. As long as if he can find someone without your ongoing cooperation, and I will get into how he does that. Sound good?
Yeah, yeah, yeah.
Okay, cool. So let me continue with the. I'm going to go. So I've gone through the protocol relatively quickly. Some might be saying, it's already too long. But now I'm going to go through it in the long way. Okay, so the coordinator is an important role in this thing. And if Kelly decides that she is 70% confident that the Republican will win, all she has done so far is she has looked at this website and she has sent money to this Bitcoin address, this one that says bet on the Republican. She has seen this and she has sent money to it. And what is her software? What is the website doing in the background? Well, it's saying Kelly thinks that she's about 70% confident that the Republican will win. Why that? Because that's about what this little thing shows according to current market conditions. The first market maker effectively sets what this is, and then as the market continues, that changes over time. That starts fluctuating. It's like the average of all the different bets. Okay, so she decides she's around 70% confident because that's about what the current thing is. And Kelly says, she wants to say, the coordinator will be my proxy. I put 10,000 sats into this Bitcoin address. I'm going to authorize him to move that 10,000 sats in only one way. He can only move it into a certain smart contract, the one I showed earlier with the Oracle,
Uh-huh.
but slightly modified, as I'll get to. And he can only do this if he pays me 3,000 sats. So she creates and signs a partially signed Bitcoin transaction that encodes this paragraph of text. And how it does that? Well, her partially signed Bitcoin transaction requires two inputs. It requires 10,000 sats from Kelly. That's what she deposited into the Republican address. And it requires 3,000 sats from the proxy. The outputs of this partially signed Bitcoin transaction are 3,000 sats are going to Kelly, and 10,000 sats are going into the Oracle-based smart contract. She creates and signs this, but it is not yet broadcasted. She just gives it to the Oracle, and the Oracle can complete it, sign it, and broadcast it at his leisure. And then she goes offline. So how did this look for her? When she was going to make the contract, we're going to assume she's the first market maker to come on here. There is no current chance for anyone to win. She's going to want to bet on the Republicans, so she's going to click create a contract. And when she does, it shows her a Bitcoin address. It says pay 10,000 sats, and you may get the opportunity to win back 13,000 sats. I'm assuming she's selected that she's 70% confident here in this outcome.
Mhm.
So that's what she does, and here is the slightly modified smart contract that we do this. She's authorizing the coordinator to move her money into from this address, which is fully under Kelly's control. The smart contract is the same as earlier. It says if the yes secret is revealed, we're going to hash it and compare it with the yes hash, and if it checks out, then we're going to allow Kelly to spend the money. The other branch says if the no secret is revealed by the Oracle, we're going to hash it, compare it with the no hash, check if it's the same, and if it is, we're going to allow the proxy to take the money out of that address. He's going to get the 10,000 sats. So the only difference between this one and the one I showed earlier is that the proxy has replaced John. And that's important because of the point you brought up. You said these markets don't work if you don't know who your counterparty is. Now you don't need to, because your counterparty is always going to be the proxy. That's you, and she does know who you are.
Yeah.
So you are going to find John for her by posting her offer. And if you find John, then you're going to move her money into this smart contract where you, the coordinator, get the money if Kelly is wrong. Now, that's your next step. You publish an advertisement about Kelly's offer. And the ad it's in the background on your website. The website doesn't really show it, but I'll show what that looks like in a minute. But in the background, your website is saying someone wants to bet that the Republican will win. If you pay them 3,000 sats, you get a chance to win 10,000 sats, because that's how much money I think her name was Kelly, put into the contract. The ad represents that Kelly is 70% confident in a Republican victory. She loses 70% of her money if she is wrong. And if she's right, she gains 30%. So now, let's say John comes along. And remember, Kelly doesn't know who John is. John doesn't know who Kelly is. They're just visiting a random they're visiting your prediction market website. And what does the UI look like for John? Well, he sees that there's actually the market has changed. It doesn't show zeros for everyone now. It shows that the Republican has a 70% chance of victory according to the current state of the market, because that's what Kelly bet on. And there's a 30% chance that he's going to fail or not going to win. So the John has the opportunity to take the contrary position in the by betting on the Democrat, and he has the option of creating another contract to bet on the Republican if he agrees that the Republican is going to win. So far, he has not made anything. He has no money and thus can't withdraw anything. But let's suppose he clicks buy a contract, and he wants to bet on the Democrat. Well, all he has to do is pay 3,000 sats, and if he does, it's going to go into this Bitcoin address, and we're going to do the same exact thing we did with Kelly. Not the same exact thing. We're going to do a similar thing to what we did with Kelly. The 3,000 sats that he deposits into that Bitcoin address, could be a Lightning invoice, becomes an input to another partially signed Bitcoin transaction, which, if the coordinator co-signs it, the 3,000 sats goes to the coordinator, who's acting as the proxy. But the proxy has to, in order to take that money, he has to put 10,000 sats into a new contract with John. And what does the new contract say? It says the reverse of what it was before. Now, if the Republican wins, the proxy gets to take the money. And if the Democrat wins, John gets to take the money. Which makes sense. He's betting on the Democrat. So the proxy is going to get 3,000 sats. That's what the output over here is, 3,000 sats to the proxy, and 10,000 sats is going to go into the smart contract. So we do that, and if you noticed, there's a switcheroo that's happened. Kelly wanted to bet on the Republican, John wanted to bet on the Democrat. They did not know each other. The proxy didn't really care either way. He just wants a wash, and he wants to serve happy customers and make some money along the way. So what Kelly did is she gave the proxy an option to bet on the Democrat and win 10,000 sats if the Democrat wins. And John gave the proxy an option to bet on the Republican and win 10,000 sats if the Republican wins. That's what their two smart contracts specify. So the proxy is going to do this. He's going to serve as a proxy between them and update the state of Kelly's smart contract so that they are now in the bet. He's going to fund this bet and update the state of Kelly's smart contract so that now they are involved in the bet. And by doing that, he also simultaneously effectively passes the money from John to Kelly so that she gets some immediate payout for someone taking her offer. And that's cool. What does the UI look like for Kelly now? If she comes back to the website, she did not have to be online for this. If she comes back to the website, she will just see that there is now 3,000 sats in her address. Someone thought her contract was worth that, and she can withdraw it immediately. She bet on the Republican. Somebody took that bet. She made 3,000 sats immediately, and if she wants to, she could do it again. She could place another offer and put more money into this thing if she still thinks the Republican's likely to win. Or she can withdraw all the money she's made so far. For John, well, he bet on the Democrat. He put 3,000 sats into his smart contract. That is the money that effectively went to Kelly. He has made nothing so far, so he can't withdraw anything, but that is the current state. That is the current state shows he can do it again. He can bet more on the Democrat if he wants to, or he can sell his contract, but that's the current state. So now we're going to skip to later. We'll say later the Democrat gains in the polls. 10 days later or a month later or something, he's gone up 8%. He was at 30% in the polls. Now he's at 38%. John might decide he wants to sell his contract. With me so far, Sanjay?
Mm-hmm. Yep.
Great. So he's going to click the sell button on here. John's going to come back to this website and click the sell button. And he's going to list his new price. He says, I think now I think the Democrat is, maybe he still thinks he's going to win. Maybe he doesn't, but he wants to sell his position. He's going to list it for 4,000 sats. And if someone takes his offer, he'll make a profit of 1,000 sats. So he has not made anything so far. And I know in Predix he would have made something at this point if the market was active. But I'm just pretending it has not been active.
Mhm.
So 0 sats, but the chances that the poll numbers for the Democrat have gone up. He wants to list his contract for sale at 4,000. Hits submit. And what does submit do on here? Well, it signs a new partially signed Bitcoin transaction. What does it say? Well, John is now 40% confident the Democrat will win. The logic he wants to encode in his contract says, if the coordinator pays me 4,000 sats, he can take the rest of the money in this smart contract. And how does that look in the actual transaction? We take the 10,000 sats that are currently in his smart contract with the coordinator, and we split it up so that John gets 4,000 and the rest goes to the coordinator. He signs this partially signed Bitcoin transaction, and then he can go offline. It has not been broadcasted. No money has changed hands yet. All he's done is sign a Bitcoin transaction, and if the coordinator wants to, the coordinator can co-sign it and make this thing happen. That is why every Aggeus smart contract has a 2 of 2 clause just for doing this. So now, the coordinator does what he did before. He's going to publish an advertisement. It's not going to be displayed to the users, but it's going to be in the background. It's just going to say you have the option of buying into an existing position instead of creating your own. And what does this position say? It says someone, meaning John, wants to sell their Democrat will win contract. If you pay them 4,000 sats, you get a chance to win 10,000 sats. And this is where Tommy comes in. We're going to say Tommy decides to take this offer, which to him it just means paying a Bitcoin address. He's just visiting this website and he sees a Bitcoin address that he can pay. But he's going to pay that Bitcoin address. 4,000 sats is going to get put into a PSBT, a partially signed Bitcoin transaction, that has the same terms as John's. If the proxy gives 10,000, puts 10,000 sats into this partially signed Bitcoin transaction, the outputs will be 4,000 sats will go to the proxy, 10,000 sats will go into the smart contract, into the new bet. And the bet, I didn't show the bet. The bet looks like this one. It says the proxy gets the money if the Republican wins, and Tommy, now instead of John, gets the money if the Democrat wins. So that's the contract they create. So back to here. Yeah, I think this is the one we're at now. It's a new switcheroo. John wanted to sell his position. Tommy wanted to buy it. The proxy just wanted to stay flat, not gain or lose any money, except possibly fees. So John, when he signed his contract, he gave the proxy an option to cancel their bet if the proxy gives him 4,000 sats. Tommy gave the proxy 4,000 sats. That was where he did here, his 4,000 sats from Tommy in this section. He gave the proxy 4,000 sats, but only if he makes the same bet that he made with John. And the proxy then uses Tommy's money, effectively, to pay John. So once again, he has no risk of loss. This smart contract is effectively canceled, the one he had with John. John gets his 4,000 sats payout, but now he is on the hook for the same amount with Tommy. 10,000 sats if the Democrat wins. So now if we go back to John, what does his interface look like? Well, now he's made some money. He put 3,000 sats in, he made 4,000 sats, that's a 1,000 sat difference. So he earned 1,000 sats in total, and he can withdraw his money. He did not need to be online for that. He just got deposited into a Bitcoin address that he specified earlier. Or you can click the withdraw button, and we have the wallet built into the website, and then you can withdraw it from there. You can do that too. Now we go to market resolution. You can trade contracts as many times as you like with this protocol. Anyone can just trade their position and say, I want to leave the market. You have to place an offer, and if someone comes along and buys your offer, you get your payout. But let's say that at some point Kelly decided to keep her position, Tommy decided to keep his position, and it's market resolution day, maybe the day after the election. The Oracle reveals the truth. What's the history of the market was Kelly put 10,000 sats into a smart contract and earned 3,000 when John bought it. John sold his position for 4,000 sats, thus earning 1,000, and Tommy bought John's position for 4,000 sats, and if the Democrat wins, he can win 10,000 sats. So here are the outcomes. Let's say he reveals the Republican wins. The Oracle reveals the Republican wins. In that case, this is Ken. At one point in the history of this document, Kelly was named Ken, and she was a guy. and I forgot to change it. So this is supposed to say Kelly. Kelly gets the 10,000 sats back that she put into her smart contract. She gets to keep the 3,000 sats that John gave her. So she ends up with a 30% profit, which is just as she should, because she was 70% confident and she was right, so she should make 30%. The proxy, meanwhile, loses in this contract. He gets 0 of this 10,000 sats. However, he also has a contract with Tommy. Tommy bet on the Democrat. Tommy lost, so Tommy gets nothing. He loses just the money that he paid, which was 4,000 sats, and the proxy gets 10,000 sats back. No loss for him because he lost in this one, but gets 10,000 sats from this contract. Which is 10,000 sats that he put into it. Meanwhile, if the Democrat wins, well, Kelly loses her bet, and since she put 10,000 in and only got 3,000 from John, she effectively lost 70% of her money. And who gets that? Well, the proxy wins all 10,000 sats from that bet, so he's happy. But it's not. He doesn't get to keep it because Tommy also won in his contract, meaning the Democrat won. So Tommy gets the 10,000 sats that are in that bet, but since he paid 4,000, he effectively gets 6,000 sats total. And the proxy loses 10,000 sats from that bet, so it's a wash for him. He won 10,000 in this one and lost 10,000 in this one, and that's the situation. He only makes the money he charges in fees to these users. So that is the longer description of how the protocol works, and I have time for questions and answers now, as well as a demo where I can actually show you. Well, I haven't implemented the entire thing, but I've implemented about 2/3 of it, and I can show you those 2/3. So, do you have any questions, Sanjay?
I mean, there are a lot of questions. The question is, the way we do it in prediction market, right? Like here, you show people are taking each other's position. So maybe I'm this is something new for me, so I'm still trying to wrap my head. But the way we do business is we issue shares, right? So people have shares. The price of the share goes up and down, so they hold that share. The share is basically a proof of ownership, how much you will win. So every share is redeemable for one. Like for example, one share is equal to one sats. The price of the share when he or she bought it could be whatever 390 millisats or 400 whatever 450 millisats and so on, right?
Mm-hmm.
So that's what they pay. And at the time of resolution, if they have so many shares, they get paid out that amount, right? They get paid out one sat per share. So that's how the market works, the UX, right? So that's slightly different. Maybe I mean, it looks great. Maybe I have to wrap my mind around how do I combine the two. It is a matter of saying things, right? Like
Well, let me reiterate that just in case people in the
mhm,
recording couldn't hear you. I forget whether I had set my computer to record your audio.
mhm,
So just in case they couldn't hear, Sanjay was pointing out that in the current user interface for Predix, he uses a share model where users buy shares of the potential outcome, and if there are 100 shares sold for yes, and you purchased 30 of them, you get 30% of all the money that your opponents that you get 30% of the pot from your opponent. And the model I'm
no,
using,
you get 30 sats. If you hold 30 shares, you get 30 sats.
if you hold
Yes,
30 shares, you get 30 sats. Uh,
yes.
okay,
So
cool.
each. Mhm,
Now, in my model, what I'm doing is something called a
mhm,
precision prediction market, which is
right.
where you set in the interface the percent chance you
Mhm,
think your person is
mhm,
going to win, and your payout is based on how accurate your prediction was, which is a
right,
little
right.
different from the way you're doing it. But this is the way that I figured out how to actually represent this on Bitcoin, because in Bitcoin
Mhm,
you can actually deposit money into a Bitcoin address and then sign a signature that pays you out different amounts from that depending on outcomes. And so
right, right.
I found a way to represent different prediction values using signatures and using the value field in the Bitcoin transaction.
Mhm,
And so that's what I was able to come up with. And then I'm trying to recreate a familiar interface using this primitive. So it does work differently, but I think you
Hmm.
can create an interface that's very similar to what you currently have.
Right, right. I mean, you this model is, I mean, I think it's great too because you are basically placing a future order, limit order, right? I mean, whatever you prediction you think, so basically you're placing a limit order, and if there's a taker, you're making the market. There's a taker at that position. So yeah, I mean, your model would work great for limit orders, like any
Just in case
particular
anyone
trade.
was unable to hear that, he said that the model I'm showing reminds him of limit orders, and he thinks it would look really great in a limit order context where you can place an offer and someone else can come along and take your offer in a somewhat or partially automated fashion.
Hmm.
So he likes that about it. Okay, so cool. Do you want to see the demo or do you have further questions?
No, I think I'm good. Yeah, let's
Okay.
continue with the demo. Mhm.
So I'm going to do the demo now, and I'm going to hope it works. This is the page where I'm going to do the Aggeus prediction market stuff. Obviously, there's a problem with the way this looks. This is not pretty because I don't specialize in making things very pretty. I specialize in coming up with a protocol that can work and making something that barely works to show that it's possible. Also, over here, I have a testnet. This is this is a testnet generator. And if you, just in case you haven't seen this before on testnet generator, it's a thing I made, you can generate Bitcoin blocks. I'm going to generate four of them there, 4 Bitcoin blocks. Every time I generate a Bitcoin block, I get 50 Bitcoins into my wallet, 50 fake Bitcoins that only exist on this web page. Also, it has some other features like you can generate blocks every half a second and have really fast blockchain, which is kind of fun. And look at my little Bitcoin balance is climbing. Pretty cool. But the other thing you can do is you can click a block and examine the transactions in it. For example, this is a transaction, we call it a Coinbase in Bitcoin. Coinbase does not refer to the company Coinbase, but the first transaction in a block that pays the miner his reward, that's this one. It has no inputs, but it has outputs of 50 Bitcoins to
Mhm.
the miner, which is me. So you can like examine the transactions in a block, and so I'm going to use this to demo the software, and we're about to see that. But let me refresh it, and now we're starting fresh with a new blockchain. So first thing I'm going to do is I'm going to click that I want. Well, I'm going to make copies of this. I don't need this guy anymore. I'm going to make copies of this because there are multiple roles. I think I need 3 copies, and I'm going to click that I'm an oracle for some market. And we're going to do just like the one we did in the slideshow. Will the Republican beat the Democrat? And we're going to enter a block height when we expect to resolve this contract, which we'll say is block 10.
Yeah.
Now we need someone called the coordinator for this market. So I'm going to go back to this page, and I'm going to click Be a Coordinator, and I'll also run the coordinator on here. The coordinator is supposed to do Lightning payments and Layer 1 payments. And so I ask him to enter an NWC string, which I've pre-populated into here. NWC is a type of Lightning API for controlling a Lightning wallet, but it's receive permissions only. He doesn't need to spend money from his Lightning wallet, so it is safe to just give a receive only Nostr Wallet Connect string for this. And I don't even think I'm going to use it in this demo, but he does that. Now he's got something called a coordinator ID, and he's got a private key, which is where his money is going to end up. So I'm going to enter the coordinator ID over here, and the Oracle now knows who the coordinator for this market is. Remember, in your marketplace, you would be the coordinator in
Hmm.
Predix. So I will submit that, and now we have created a market. Here's the market ID. The market is called Will the Republican Beat the Democrat? The Oracle has a private key here, and she is going to reveal she's going to click one of these buttons and either reveal this secret if the Republican beats the Democrat, or this secret if the Democrat beats the Republican. So now I'm going to go over here to view a market, and we're going to pretend to be a user now. And the user needs something called the shareable data. This would probably be in the background of your website. This would be like you just see a list of markets, like a market might be called Will the Republican Beat the Democrat? And if you click on it, this would be loaded in the background. But here I'm copy pasting it like a like a barbarian, and so that's how this interface is designed, because it's easier for me to do it this way. So she can see this market. Will the Republican beat the Democrat? She can't see the secrets that are going to be revealed, but she does know their hashes, and she can see there are currently no offers in this market. Now, this does not have the interface that I desire, which is the one where you just see a QR code for Republican or Democrat. I haven't built that part yet. I mentioned it's only about 2/3 done, but I'm going to show what's in the background would be behind those QR codes. Is what she's really doing when she's paying the yes QR or the Republican QR code is she's making an offer. So I'm going to show what it means for her to make an offer. She needs to select the outcome she thinks is most likely to occur, which is yes, the Republican will beat the Democrat, is going to be her prediction. And we'll say, just like in the slideshow, she's 70% confident in this outcome. So she submits that offer, and now I need to open up my browser console where a Bitcoin address has appeared in here. You might not be able to see this. Let me make it a little bigger for you. It says send 10,500 sats to this address. The extra 5,000 sats is for a transaction fee. Really, this would be done on Lightning so that transaction fees aren't significant. But yeah, she's going to send 10,000 sats to here, and I will do that using my testnet generator. So I have 50 Bitcoins in there. I'm going to send 10,000 sats to this address using a fee rate of 1 sat per byte. And now I can view that transaction. Here it is. It puts 10,000 sats into her Bitcoin address. So that's what really she's just seeing a Bitcoin address and paying it, but in the background it's doing stuff with the blockchain. Okay, so I need to copy this transaction ID, and it asks her to paste it. It wouldn't really do this. It would just get it from an API, a blockchain API, or from a Lightning node thing. You can automate this part. It also needs to know the vout. So if you're not familiar with Bitcoin transactions, they are indexed by each output has an index number, which in this case it's 0, is the one that pays 10,000 sats to her, and then like vout 1 is the one that pays the change back to the miner of this blockchain. So vout 0 is the one we need. Once again, this would not be exposed to the user. The user wouldn't see this part. They would just pay a Bitcoin address, but it's only half built, so that's where we're at. And how much did she deposit into it? Oh, I forgot and accidentally deposited the wrong amount. I deposited 10,000, and I was supposed to deposit 10,500. I'm not sure how that will work. Something might break here. We'll see. Okay, so she has clicked that, and she's supposed to send this piece of text to the coordinator. Once again, this would be done in the background, but I'm copy-pasting like a maniac here. And the coordinator would have an API where he will accept these pieces of text that represent she is making an offer on his system. Someone wants to create 1 share in the market. Will the Republican beat the Democrat? This is the oracle they're using, and it expects to resolve at block height 10. Does he want to help? He can do that. Sure. And now in his console, it got a Lightning invoice, and it's going to present that to her, and she's going to pay this Lightning invoice to get into this market. So he's going to share that back with her, paste that, and she gets something called a backup file, which is right here. This backup file encodes the terms of her smart contract. I'm going to save that in here for use later in this protocol. And she's supposed to broadcast this Bitcoin transaction. So I will broadcast this over here. Paste, broadcast. And as I expected, something broke. Because I accidentally put in 10,000 instead of 10,500, I didn't have an extra 500 sats for the fee. So I'm going to reset this and redo it so that it'll work, because I forgot and accidentally sent the wrong amount. So perils of not automating it is things like that can happen. Will the Republican beat the Democrat? And the coordinator is going to be this guy. Paste that in there. Here's the shareable data. Will be Kelly again, and she's going to make an offer. She thinks there's a 70% likelihood. Submit this. Now, to redo that part, I'm going to send 10,500 sats to this address, which is the correct amount. Send 10,500. Here's her transaction ID. If we look at it, the V out is 0 again, and now it sends the right amount in. So 0, 10,500. Now she can send this to him. Help with the offer. Paste it. Someone wants to create 1 share in this market. Do you want to help them do this? Click OK. Of course, that would be automated, but it's not in this demo. She sends this back in reply, and now she saves her backup file. This will let her withdraw her money later. And of course, this would be saved in her account invisibly. She wouldn't need to actually download this, although I would recommend doing that. And then she's supposed to broadcast this transaction. So we go here, broadcast that, and now it didn't give me an error. This puts the 10,500 sats in the smart contract that she's, well, it funds one of her addresses, and this is going to be used by the Oracle, or not by the coordinator later. He's going to get a same transaction from her that allows him to update this state when he finds a counterparty for her. So now it says, congratulations, your share is listed for sale. You may now go offline. I don't know if you can see that. I'm going to make it bigger.
I can see you, yeah.
Okay. You may now go offline and come back later to see if anyone bought it. You can track your share status on this page or go view your share on the public market. So once again, she wouldn't see all this. She would just see a Bitcoin address that she pays, and that's what she does. She pays a Bitcoin address, but in the background, it's doing all this stuff. Okay, so that's where we're at currently, and this guy's done with his part. He is waiting for the invoice to be paid, he's waiting for the invoice to be paid. That's what gets her into the market, and then he also wants this transaction to confirm. That's the one C39. So let's go and confirm that transaction. I do that by generating a block, and now this block has that transaction in it as transaction number 2. So that's confirmed, and he can say, okay, I saw the transaction confirm, and everything should be hunky-dory now. Her share is listed for sale. In fact, if I return to this page and view the market again, now we're going to be John, he can see that there's an offer now. It wouldn't show it to him as an offer. Once again, he would just be seeing a QR code that he can pay. But if he wants to take the other side of this market, he can pay 3,000 sats to get the chance of gaining, well, 10,000, but, minus his cost, it's 7,000 sats if the Democrat wins. So now we're going to be John, and we're going to buy this contract, but he doesn't have to click a button. He would just be paying a Bitcoin address. And when he does, he gets it tells him, inform the coordinator that you want to do this. This would be automatic, though. It would just do this when it detects that his money has entered the address. Enter the data. Now it's giving a Lightning invoice for him to pay. And here we go. It asks him to pay to get into this contract. Shows him, this is the QR code it would be showing him. So we automatically do this. And click OK when 10,000 sats enters this smart contract and its funding transaction confirms. Again, he wouldn't need to see any of this. This would all be happening in the background. But the protocol says that once he's paid to enter this contract, the coordinator is supposed to fund the smart contract with 10,000 sats. So that is what I'm going to do. It's supposed to be 10,000 sats going into this Bitcoin address. So click OK. Does he need to do anything? Yeah, fee invoice got paid. Send 10,000 sats into this Bitcoin address. So we'll do that. Coordinator does this part. Send 10,000 sats. Fee rate of 1 sat per byte. Here it is. You can see the 10,000 sats entered this Bitcoin address. So, he funded it. The payment already got made. Great, that part's he's done so far, and I think this guy needs to do something. Click OK. pay the payment invoice in your browser console and enter its pre-image. Okay, so I'm assuming that John is entering this contract by means of the Lightning Network, and so he'd be paying a Lightning invoice and not a regular Bitcoin address. And so when you pay a Lightning invoice, you're supposed to get this thing called, well, you do get this thing called a proof of payment. But because this is a demo, I'm not actually going to pay the Lightning invoice, and I'm just going to make up a proof of payment. So 1, 2, 3, 4, 5, 6, 7, 8. That'll be his proof of payment. Ab, 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 ab. He'll hit that, and that will count as a proof of payment for purposes of this demo. So he gets a message here. Congratulations, you are now a counterparty in this contract. It is safe to go offline. On resolution day, it is important to return if you want to collect your earnings, if any. If you don't return, then you can lose your money. He can also view his status on the My Shares page, which I'll be showing you in just a minute. So now we have both counterparties are entered. Kelly is over here. She has entered the contract. John is over here. He has entered the contract. The coordinator, he has to update the state of her contract, of Kelly's contract. He got the 4,000 sats from John. Now he has to forward them to Kelly. Otherwise, he is on the hook to lose some money. So that's what he does next. He is going to pay 4,000 sats to Kelly using this. 4,000 sats. So he's done that. Copy this thing, and you can see 4,000 sats has entered Kelly's address. So there it is, 4,000. And now he's going to broadcast this transaction that does this. And why don't we go ahead and mine it into a block. Now there's a block that has updated the state of Kelly's contract. And the important thing is that at no point during any of this scenario did the coordinator have custody of anyone's money. He has been simply a proxy, proxying money from John to Kelly in order to stay neutral in this marketplace. Okay, so now they're all done. With that, the last thing to do is actually reveal yes or no for the market. So we'll have Kelly use her backup file to relog into this website. Of course, this would actually just be saved on her, saved in her like local storage or in her like account on the website. But yeah, she's going to come to this website. It is resolution day. She's going to click view my shares. Here's the backup file. This is just her logging in. And it shows that she is the market maker. She predicted yes. We're awaiting the resolution of this contract. She deposited 10,000 sats. She can actually view that on the blockchain. The transaction ID is all there. If I clicked it, it would go to mempool space, and mempool space will throw an error because it doesn't know about this testnet that I'm doing this on, because it's my testnet. But if this is a real implementation, this would actually show up and there would be a transaction to look at here, which is cool. She has already earned 3,000 sats, and she can withdraw that because somebody purchased her contract, which is John. He purchased her contract and the money went to her. But now we're going to click resolve the contract, and I'm going to have the Republican win the election. So I'll click yes, the Republican won the election. Here's the secret that the Oracle reveals. She resolves the contract, and it enters the transaction ID that sent money into this address. So she needs that. Let's go find it. That one's this one. So it is right here. Here's the transaction ID. And she has to enter a Bitcoin address where she wants her money to go. I'm just going to send it back to the faucet, back to the miner who is funding this thing. So she's going to put the money back there. And here is her Bitcoin transaction. And if all went according to plan, she should be able to broadcast this. And boom, she did. There it is. Without the coordinator ever having custody of her money, she has won her 10,000 sats back. So she got 3,000. And now she's gotten an additional 10,000 minus a mining fee. So for her total is 1,300 sats are in her Bitcoin address. 10,000 of it is right here, and the other 3,000, if I go into this block, where's her? It should be, yeah, there it is. There's her other there's her other 3,000. So she's made money here, and she's made money just now, and she won the market. I didn't implement the rest, but the coordinator would also do the same thing with his contract with John. He would use the pre-image to resolve his contract with John and take 10,000 sats out of there, and thus John lost. The Democrat lost the election. He doesn't get anything. Kelly does. And we've done it. We've done the protocol, or at least the 2/3 of it that I've built, with a horrible user interface. But it works. The protocol works, is the point. You can do this, and I think using the primitives that I've outlined here, you can make an interface that looks like this, where you're just sending money to QR codes, and in the background it's doing all the logic that makes it so that you have a non-custodial prediction market. So that's the demo, and yeah, I think that's all I've got to show. Do you have any questions about the demo?
Yeah, one thing I noticed that you said that when people win or lose, they have to come back on the day of resolution. You know, uh,
Mm-hmm.
is that a requirement that if they don't show up, they lose their money, or or can that be automated in such a way that
You can kind of automate. You can't automate it without losing some trust. So what you can
Mhm.
do is you can have them sign the transaction ahead of time that gives them
Right?
their money, and then give that to someone. For example, they could have that hosted on the website itself, and then on resolution day you could broadcast it. You being predicts, you could broadcast
Yeah.
the transaction, and the money
Mhm.
would go into their Bitcoin address if they win.
Mhm. Yeah.
However,
Yeah.
that requires trusting the website in a
Right.
sense. If he doesn't do that, then the user has to come to the website to get the earnings
Right.
because no one broadcasted it on their behalf.
Mhm. Right.
But yeah, in theory the website can do it for the user, but I don't think the user should rely on them to. I think the user should have a backup file that has their transactions in there and be able to do it
Absolutely.
themselves.
Yeah. Yeah.
I also think it is possible that a user might have completely abandoned the protocol. They might
Mhm.
put money in and then forget that they did and never come back for it. And so
Yeah.
I thought it would be wise to have a clause in each smart contract that says if the service provider doesn't broadcast your transaction for you and you don't show up for like a week, then the coordinator can take the money. Like it's abandoned funds and he can take it. So I thought that would be a good thing to put in the protocol. But in theory, you do not have to. You could just not do that, and then any money that doesn't get collected by users is just lost, and no one collects it. So
Right.
that's
Right.
also an option.
Hmm. Okay. Very good. Yeah. I think that's. I mean, typically, yeah, people would not be. Yeah, I think, but it's a good UX because no one. Typically, like in the market, I've seen a lot of times people
Mm-hmm.
bet they forget. They normally like someone a visitor would come, make few bets and forget.
Right.
So, but we pay. Like we obviously make sure that the Predicts wallet or the Lightning address gets paid no matter what.
Right.
Right.
You can do that with this protocol. The user
Mhm.
does, as long as the user is signs the transaction, you can broadcast it for them later if
Right.
the right secret is revealed, and that's
Right.
great.
Right.
And if someone abandons their funds,
Mhm.
and you use the option I talked of sweeping it for them, you can also make it so that if they ever do come back a year later and they remember, oh, I had some money on there, you can
Mhm.
give it to them at that point as well. It's another thing you
Yeah.
could do.
Yeah. Okay. So, is there any security issue in holding that signed transaction from the user? The winning. Yeah.
It's not sensitive information. All it consumes. Let me see if I can find the PSBT
Mhm.
thing. Not that one, but this one, the one that says 10,000 Sats to the smart contract. It
Mhm.
consumes that as an input and
Right.
sends it to, Kelly if she won, or John
Right.
if John won. So it's not sensitive information. It doesn't
Mhm.
have any personal details of the users. It does have a Bitcoin address, so that
Right.
that could be sensitive if it's like a
Mhm.
really worthwhile one. But yeah, it's not. It doesn't have the user's private key or anything. It's just a signed transaction by them that has
Okay.
their Bitcoin address as an output.
Okay. So next question is, if anyone gets a hold of this PSBT, you know, they would be able to exploit it, right? They would be able to add their own address and
No.
execute this transaction.
The
No.
signature from the user is only valid for a transaction that sends them the money. So if
Okay.
someone tries to tamper with it, the signature would become invalid, and thus they can't do anything with it. It would no longer be a valid Bitcoin transaction.
Okay.
So you can the only thing you can do is if the Oracle reveals the secret for sending the money to Kelly, you
Hmm.
can send the money to Kelly. Anyone could, if everyone knew the transaction, everyone could broadcast it once they know that secret. But they couldn't change the destination. It has to go to Kelly.
I see. I see. Okay. Very good. Thanks. Yeah, that's that was my concerns. Like, man, that is important concern. So yeah, thank
Yeah.
you
That is the
for
magic of
clarifying that.
partially signed Bitcoin transactions, which I think are one of Bitcoin's coolest features, and they're only ever used for managing hardware wallets, but they can be used for
Yeah.
so much more. And here's a unique use case for them that I think is really cool. They're also used in ordinals auction PSBT auctions,
Yeah.
and that's a really cool. Like I've always thought that the thing that they did with PSBTs was unique and interesting and novel. But I don't
Mhm.
like altcoins, so now I figured out a way to do a similar thing in
Right.
a
Right.
prediction
No,
market.
actually, I'm a part of. So I launched very early on when Ordinals got launched.
By the
Even
way, I'm going
I,
to pause the recording now, so just
sure.
be aware.